Be advised that the views and opinions of the hosts and guests do not reflect those of the station.
Hello everyone, you are watching the Business Portal, your gateway to business trends and opportunities. Hi, I'm Marybeth Nave, and welcome to The Workplace, where we show you how to make the most out of your profession and give you the latest career trends or industry trends to stay ahead of the corporate game. Well, you know what, everyone? Happy New Year. Happy 2014. I hope everybody is starting off the year right and you have your set goals and priorities, and probably you're already starting off with a new life, a new you, a new everything. Well, you know what? A lot of people who've been sending us emails last year already told us that you've spent a lot of money in terms of food, travel, gifts, also donations, a lot of the victims of calamities last year. And this year, a lot of people have had requests on where should they actually put their money this year. And actually, we've invited one of our very favorite guests who's been with us every year, the start of the year, to talk to us more about the challenges of the stock market in the last year, well, for now, 2013, and basically how we can look forward into the stock market, how it's going to be doing this year. Ladies and gentlemen, please welcome to the workplace the COL Financial President, none other than Mr. Dino Bate. Good morning, Dino.
Good morning, Marybeth, and Happy New Year.
Happy New Year, yes. In fact, you know, a lot of people have been asking this question. What has happened with the stocks last year in 2013?
Okay, the stock market last year was a bit, went through what they call a roller coaster ride, meaning in the sense that at the start of the year, people were cheering the market. It was up almost over 25% at the first quarter and or the first 5 months of the year, and all of a sudden, all of that has been erased and ended the year with only up 1%. Although the reasons for this were more external rather than internal, meaning the markets were rising because interest rates globally were expected to remain low. Therefore, people were looking for a home to put, where to put their money, and they looked at Southeast Asia as a place where there was a lot of growth, and that's why they invested here. In May of 2013, there was an announcement by the Fed hinting that they were going to taper the buying of bonds in the U.S., and therefore will mean taking out some liquidity, and therefore money moved out of Southeast Asia and back to the developed markets. So at the end of the year, we ended about 1.5%, so that's still up positively, but from where it came from, I guess people are a bit worried, disappointed, because they saw a gain of over 25% at one point, and all of that losing it at the end of the year.
Okay, so what is the situation of the stock market this year, 2014? Is it a good time to buy, to sell, what?
I think when people invest in the stock market, people have to understand that investing in the stock market is for the long haul. And you know, when prices have down from where it was before at the high of 7,400, it's now about 5,900, a 20% decline from its peak, I think it's one of the best times to do it. And I think this year will give you a good chance to accumulate investing in the stock market now and reap the returns maybe in the next 2 to 3 years. And I think people should not be worried about the short-term concern, but rather look at the long-term prospect. We should all understand that the Philippine situation has really changed. The dynamics of the country is much better than it was 10 years ago, and therefore the concerns that we're seeing today are, are noises from the overseas markets, but the country continues to be strong and will continue to grow at a much faster pace than it used to in the past, which is about 4%. I think on average it will now be about 5 to 5.5 for the next 5 to 10 years.
Okay, thank you for that. You know, actually our viewers have a lot of questions with regard to what should they look at in terms of like the economy. What are these aspects to know that, oh, okay, this particular, the stock market's going to increase or do better? What are those, because you mentioned it changes, right?
Yes,
or it has changed, or it's continually changing. What are those factors that we have to look out for this year?
I think for the country this year, I think that one of the catalysts, so what people are looking for to give them some assurance that the growth will continue, is if government will continue to launch its what they call the PPP program.
Okay.
This PPP program is supposed to improve the infrastructure of the country and therefore attract more investments. So when the government starts rolling out this PPP program, which I think they're about to roll out another 15 projects this year, this will, again, give investors the confidence that the Aquino government is now serious about pump priming the economy with investments from the private sector to make sure that the growth of the country can be sustained.
Okay, and you know what? A lot of our viewers, like we've had a lot of requests for you to come back because they say that you're able to actually make them understand what the stock market is all about. So we're very thankful that you're here once again with us. And in fact, we have questions coming in right now, and they already have a question with regard to what is good to invest. What kind of stocks are good to invest for 2014?
Okay, the stocks that you should look at for 2014 are two things. It really depends what is your objective in your investment. If you're looking for growth, then you have to look at companies that are in the growth mode, such as consumer companies and in tourism.
We're not talking about companies that are just starting
yes,
and are
growth.
growing.
Meaning growth, when you say growth, like example, the casinos are growth businesses. And when you talk about tourism, you can also talk about consumption. Consumption is also another growth sector. And of course, if you want a more defensive, which is paying you regular dividends, and the dividends at these levels are, at about 4 to 7%. For telcos, it's about 7%. And for some of the utility companies like Meralco, it's now giving you 4.5% a year in yield. So, if you want a value company, these are value companies because they give you regular dividends every year.
Right, right.
So that's even much better than what you would get in your fixed income investment today, which gives you about 1.5 gross. So if people just realize the potential of the returns that they can get in the stock market, taking away the price performance, the yields are much better than what they would get in a fixed income instrument today.
Okay, so you already mentioned that actually this year's a good time to start buying stocks because again the prices have gone down.
Yes.
And but for those who have invested a lot with last year and the prices are actually up there, should they continue to hold on to those stocks or should they already start selling because it might even go down for this year?
I think people have to understand that I think if they bought good quality companies. When I say good quality companies, companies that have predictable earnings, good management, and a superior product, they have nothing to worry about. All they have to do is continue to invest more as prices go down, or they have to do it on a staggered basis over a period of 6 months to a year.
Why?
And I think because prices are not going to go
up, down overnight.
No, it's not going to go up in 2014 the way it did in 2012. So there's going to be what the period of consolidation where prices will trade at a range.
Right.
So therefore, they should take advantage of market weakness to buy more stock, and and continue to just hold on to it until the market recovers, which we believe will happen maybe in 2015 or 2016. But still, the returns that they will get in the stock market will definitely outpace the returns they would get in a fixed income instrument today. So in the end, the key to investing in the stock market is you have to make sure that the money you put in the stock market is for the long haul or for the long term. It's long-term investing. And that's how you will reap the rewards of the stock market.
Okay, we actually have a question right now by Gino. Gino said that he started out his own business with his partner Patrick just 2 years ago, and they have not had their company signed under the Philippine Stock Exchange. And they wanted to find out if it's actually very easy to do this and how to go about that.
I think the first thing they have to do is really get an investment banker to look at their business and evaluate it and whether to see whether there is an appetite for the business that they're into. And I think the process will take about 6 to 8 months. They have to make sure that their books are all in order and that they have a superior product and that they're, and I think once they present it, they will be able to be guided in whether what way they should go to try to raise money, whether it be through the stock market or by issuing corporate debt or going to the bank.
Okay, thank you for that. Now, Ali has a question. Hello, Ali. I wanted to find out if, companies who are listed under the PSE Stock Exchange are all stable and, they will not close after they've invested within the first year.
Of course, so companies that that are listed in the stock exchange or the stock market or the PSE, has gone through a rigorous, regulatory requirement, and therefore the best ability of the regulators to determine the business has been, put in place.
Mm-hmm.
So chances of companies, going bankrupt is, not high. I think it's very low, but it's not impossible. It can happen, and that's why what we tell people is that you have to understand the companies that you put your money into. And the simple way of doing it is look at the companies that you patronize on a daily basis, such as the bank you put your money into, the utility company that you use, right? Or the
malls that you actually
patronize,
shop in.
you patronize. And all these companies will continue to grow and even outlive us. And therefore, we should be putting our money with them. And instead of trying to compete with them, let's just partner with them by being an investor in these companies.
Okay, thank you for that. Anna just mentioned right now that she has not invested in the stocks at all because even her parents are discouraging her to do so. What are the advantages of actually opening an account? And I'm currently at 25 years old. So is it still too late, too early? And what are the advantages of actually opening up a stock market account?
Her name is Anna?
Anna, yes.
Okay, Anna, I think what you really need to do is one of the biggest advantage you have today is your age. You're 25 years old. And, in investing in the stock market, time is what you really need. And since you're 25, I think you should start now. And the earlier you start, the faster you'll be able to build your wealth. And you will only need a small amount of money to do so.
When you say small amount, how?
Whatever you can really, what you can spare. You can start investing in the stock market with 5,000 pesos. And you can earn that over, it does not have to be on a monthly basis, you can earn it over a quarter, whatever you put aside. I think at 25 you should be earning about, let's say, 15,000. And so, and I hope, and since if you still live with your parents, therefore you don't really need to consume the whole 15. You can put 2,000 pesos on the away every month and accumulate it over a quarter, and that's 6,000, and start opening account and investing in the stock market. I think the stock market, has made a lot of people worry about the negative news you hear about the stock market, but they don't realize the potential that it has done or has given for people who've believed in it over time. And the returns are much better than any other financial instrument that is available today.
Okay, thank you for that. Now we do have a question by Mina. Mina just wanted to find out that she and a bunch of her friends are non-Filipino citizens. Is it possible to actually open a stock market account in the Philippines? We were just talking about this a while ago.
Yes. No, I think, yes, the Filipino, non-Filipino, it's just like opening a bank account. You just have to make sure you submit all the requirements to, to show proof of your nationality, such as your passport and where you live and all that. So that you fill up the form, and all that is what you need to be able to open an account. So it's not difficult.
Okay.
It's just like opening a bank account. It's the same requirements.
Okay, Gina just wanted to also find out that do they always have to monitor the stocks online just to see if the company is still there, if the money is still going up? Because some of his friends apparently has been doing this, their internet's always on and they always check the fluctuations, the ups and the downs of course, the stock market. Do I have to do that, or what do we look for an investment banker also to manage the finances? How do you go about that?
I think you have to understand the reason why you're in the stock market. If you're there to build wealth over time, then you don't have to watch the stock market every day. All you have to do is stick to good quality companies and invest on a regular basis. Now, I'm not saying you should put all your money in today in the stock market, although it's down 20%, but you should start slowly accumulating stocks during this period where markets are just going to consolidate or trade at a very narrow range. Now, if you're going to be active, like your friends, probably your friends are active and they want to trade the market and go in and out. Therefore, you have to keep your computer open and monitor your stocks online on a regular basis, or on a minute-by-minute basis. But I don't think that's your intention, because if you're going to do that, then you have to have the skill set to be able to perform or do well in that type of investing method.
Okay, Anthony just already sent a message and via email. Wanted to find out that what are the predictions for the stocks this 2014? What are, because I've been in the stock market for over 5 years already, and I just want to find out also how it would look for the stocks this 2014.
I think 2014 will start very slow and could be a little bit choppy towards the first end of the first quarter as there's more clarity about what the Feds are going to do in the U.S. and how interest rates will react here locally and how exchange rates will react globally against the U.S. dollar. So there's going to be a lot of volatility in the first quarter. But again, these are opportunities rather than threats. People have to understand, if you invest in the stock market, when prices go down, that's your opportunity. Right? And you should take advantage of that opportunity and invest wisely, meaning buying good quality companies and buying it on a staggered basis. But I think towards the end of the year, when there's more clarity, there's going to be a bit of a scare. But at the end of the year, I think that will all now normalize. And we're going to see that the companies that you've actually purchased will continue to be able to grow in this environment. Although interest rates have gone up a little bit, but it's not enough for them to stop expanding or providing the service that they normally would provide their customers. So I think 2014 for us, people who are going to invest in the stock market, they should look at it as an opportunity to start investing or continue to invest in the market.
Okay, and okay, we have viewers who said that they saw our episode last year, and in fact, they just wanted to find out because they just started investing last year, and they wanted to find out if their, what do you call this, relatives in other countries can also take the services of COL Financial. Is it extended to them if they're not here in the country?
Yes, I just want to tell you that we've just recently signed an agreement with a company called iRemit. I mean, it's a remittance company that is based in 27 countries around the world. And with this arrangement, it will now be easier for investors or customers who'd like to open an account with COL to open an account through them. Because our problem in the past was because of this KYC or Know Your Client rule, where there had to be a face-to-face requirement by the regulators for anyone to open an account. With iRemit's offices around the world, they can now go to the iRemit offices. I mean, they have to look at where the offices are. I think you just have to look at their website and see where their offices are located in the key cities around the world. And you can now open the account, through them, and fund your account through them too, and it will be credited to us. And we have an arrangement that will make the facilitation of fund transfer much easier.
Great. Actually, we'll also be showing photos later on with regard to that MOA signing, but that's after the second segment. So actually, we do have a lot of people asking about how to invest in the stock markets this 2014. Maybe we can also give an overview of how or how much should they actually allocate. Should it be their actual savings? Because these are the questions that I think first-timers who are watching the show right now have a concern with, like in terms of is it difficult to open a stock market account? How do they go about that?
No, as I said, it's not difficult. If you want to open an account with COL Financial, we've now made it available online. So you don't have to go to our office and pick up a form or download a form. You can just fill out the form online. I mean, you can do it now online, and you can just print it out and send it to our office, and submit all the requirements that are needed, such as proof of billing, a copy of your government ID. That's all you need. And once it's processed, I mean, the company will now send you an email telling you that your account has been approved, and therefore you can now fund it with the account number. Okay. Once you've funded the account through the major banks such as BPI, BDO, and Metrobank, and you can do this online too. So you don't have to leave your office or your home to be able to fund your account. You can do it from your desk and fund it through the internet. Because if you have an online account with these banks, you can just fund it. We are a merchant of these banks, and therefore you can just fund it through them.
Okay.
And we absorb all the costs of funding transferring money through us. So it's going to be, COL makes it really very convenient and easy for our customers to fund their account.
Okay, and also there are no requirements to, like, for example, a particular person who's starting out with the stocks, they don't have to earn like a certain amount in order before you can actually approve of their account. No,
they don't have to. All they need is 5,000 pesos to do so.
Okay.
So in other words, you don't have the amount of money. The question you asked me is how much money should I allocate?
Yes.
Okay. I think the average amount that we normally tell people, which is for people who are about 30 to 40 years old or 35 to 42 years old, maybe it's 20% of your
income.
your savings.
Okay.
Because your income is really dependent on your savings is what you put aside. So what
Right,
you put aside, you put 20% of that in the stock market.
Okay.
Right? For the younger people who are, like Anna's 25, they can put even 80% because they don't really need the money that they're earning today because they're still being supported by their parents.
Right.
So they can put as much as 70% of all their savings into the stock market.
Oh,
Right? Because they don't need the money. But for people who have family and who have bills to pay and all that,
Right.
then we say whatever you save, you should put 20% in the stock market.
Okay.
Right.
We do have questions from people who just recently retired, and they said that they tried out the stock market 10 years ago. They kind of got burned. They lost their money in the stocks. Right now, they're trying to think about actually if they should get back into it.
I think what people have to understand, if you really kept your investment in good quality companies 10 years ago, for your viewers who said they got burned, they shouldn't have lost money. Because for the past 10 years, if you look at the return of the stock market, was on average about 12%. So if they bought good quality companies, even if they bought it at the time 10 years ago and just did it one go, they would have had decent returns, definitely decent returns. So if anybody wants to get into the stock market again, they should understand the mistake that they did 10 years ago. Meaning what they did probably was they got into the market, they lost money, got out and said, I'll never get back in, and waited 10 years after to decide they want to come back in again. So if they get in today, they should be ready to hold on to that investment for a minimum period of 3 years or even more than 5 years. And I'm very sure that they will make money as long as they stick to good quality companies. Okay, good quality companies is companies you patronize. Again, banks or the malls, the phone company that you use, the electric company that you're connected with.
Right.
So all these companies or, consumer companies
will definitely not let us down.
Yes, they will not let you down. Because the beauty of the Philippines is that these companies are still majority owned by the owners. So it's their benefit, or it's their benefit for it to grow because they have more to lose than the small investors, unlike in America, where the major shareholder is no longer the owners. It's funds. It's management that are, these people that are running it are just managers. They're not owners. Today in the Philippines, owners still run companies. And it is their,
they make it their business
to make sure that they grow their businesses.
Right. And of course, the people who are patronizing them will grow as well.
Yes, that's right. So you become partners with them. So you can just imagine you're working for the Zubels are working for you, the C family is working for you because they have all their money there.
Great. Thank you, Dino. Okay, ladies and gentlemen, we'll just take a quick break. When we return, we've got more to come. So, stay tuned. And if you do have questions, please do email us or text us at the number that appears on the screen. So we'll be right back.